Egypt plans to launch commodities exchange within a year. South Sudan plans environmental audit of oil fields in move to curb pollution. And World Bank cuts South Africa and Ethiopia's GDP growth forecast for 2020 fiscal year. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. First, the markets. And Nigerian market reversed the heavy gains made on Thursday to trade low at intraday today. The all-share index was down 0.30% at midday Nigerian time. The JSE index in South Africa, on the other hand, tilted sunny side, reversing the previous day's losses to gain 0.45% at intraday. The Egyptian market is closed for the weekend, but the EGX 30 rose 1.38% on Thursday. Kenya also ended Thursday positive. And markets in the Middle East are closed, but stock rebounded on Thursday, with Saudi outperforming the region as investors repositioned themselves on signs of no further escalation between Tehran and Washington. Saudi Arabia's benchmark index advanced 2.7%, its biggest intraday gain since October 2018. The Qatari index closed 1.04% up, with lender Masraf Al Rayan and Qatar National Bank rising 2.3%. In the UAE, Dubai's main share index rebounded 1.32%, a day after it fell 1.2%, led by gains at financial shares. Dubai Islamic Bank, the United Arab Emirates' largest Sharia-compliant lender, rose 1.3%, and Emirates MBD Bank was up 1.2%. In Abu Dhabi, the index added 1.12%, driven by a 1.3% rise in First Abu Dhabi Bank and a 1.7% increase in Abu Dhabi Commercial Bank. And in Europe, stocks traded cautiously higher on Friday as world markets rally on the back of easing tensions in the Middle East. For more, let's talk to Chelsea. Hello, Chelsea. Well, it's the last one for the week, and European stocks have continued to rally, and traders are turning their attention to the U.S. jobs report expected later today. What are investors hoping to see?
This is going to be a really important report, especially as the U.S.-Iran tensions fade. Investors are really looking to the U.S. economy next for signals on really how to trade going forward. Investors are looking for this to be another pretty strong month of job growth for the U.S. economy. The expectation is for about 160,000 job additions, and for the unemployment rate to hold at a rate of 3.5%, which is the lowest that it's been in about 50 years. So this would represent a bit of a slowdown from the prior month when the U.S. economy added about 260,000 jobs. But investors aren't too concerned about a slowdown at this point. The U.S. economy has been growing for several years now. The labor market has been getting better and better for about 10 years now. So they say it's reasonable to see a bit of a moderation here. But I think investors are really, counting on the U.S. economy to drive growth going forward, especially now that there's been progress on U.S.-China trade tensions as well. So I think they're hoping that the U.S. economy will really be able to extend this streak of job growth into 2020 as well.
On the hot seat after internal emails showed Boeing employees marked and tried to conceal information from regulators. How serious is this for the company?
It's definitely a serious situation for Boeing. Boeing's main goal right now is to get the 737 MAX cleared to fly again. To do that, they need the FAA, the airline regulator in the U.S., to approve it. And in these emails, they're really, making fun of FAA regulators. They're discussing ways of sort of tricking them into approving the 737 when it was first in development. They're talking about sort of covering up problems with the flight simulators for the jet. So I think this is really going to add to the tensions that already exist between Boeing and the FAA right now. The FAA has already issued a statement, and they've said that this doesn't uncover new safety issues. They've had internal emails and documents from Boeing that have highlighted safety issues. So I think this really just adds to concerns they've already had, but it's certainly not going to help the relationship between the two right now. And it also could put Boeing back in the crosshairs of Congress in the U.S., which has been holding investigations into Boeing and a perceived lax safety culture. So I think this could also, stoke tensions between Congress and Boeing as well.
Meanwhile, France's Airbus says it's feeling more confident about its business in the UK after previously suggesting Brexit will deter the company. Are European companies now feeling more comfortable that UK lawmakers have approved the deal?
I think it definitely eases some concerns for European companies. I think Airbus is a good example. They've been one of the more vocal European companies talking about the potential Brexit impact. In the past, some of their most jarring comments where they've talked about how this would be devastating for them, how this would force them to reconsider investing in the UK. They were really, really worried about a no-deal Brexit. That's not happening anymore. The UK has passed the Brexit deal. It has to go through a few more procedural steps, but January 31st for a Brexit is basically happening now. So that does remove some uncertainty for European companies, but there still are a lot of questions, including how Europe and the UK are really going to trade together. So Airbus had mentioned in previous comments being worried about things like its products getting stopped at the border and sort of the bureaucratic relationship going forward now that the UK isn't going to be in the customs union. And none of those questions have been solved at this point. That's going to be part of this negotiations that are going on over the next year or more. So there's still a lot of outstanding questions for European businesses.
All right, Chelsea, let's take a breather for now and say thank God it's Friday. And let's continue to monitor those developments on the global economy. Enjoy the rest of the weekend.